Welcome to week 3. Today we're going to be talking about closing entries. So as discussed in class, closing entries need to occur for, in order to close out our trial balance and prepare the adjusted trial balance, which is then going to be used to put together our financial statements. We need to talk about temporary accounts. Temporary accounts are our income statement accounts that need to be closed out at the end of the year. At the end of the year, our income statement account should equal 0. Therefore, we need to prepare closing entries in order to close out those accounts. So here's an example where we're going to be doing closing entries of a profitable company. These were taken from the adjusted trial balance, and these are the company's only temporary accounts. So we're going to prepare some closing entries. So record the entry to close the revenue account. Excuse me. Here we have our revenue, service revenue. If you'll remember from last week, revenue is a normal credit balance account because it increases to equity our credits. Therefore, in order to close this account and bring it to 0, we're going to have to debit the account to bring that credit balance to 0. So we're going to debit our revenue account, which is called service revenue. Okay, service revenue. We're going to debit it for the total amount of $30,720, and we're going to credit a temporary account, which we discussed in class is the income summary. Okay, so now we have a credit balance in the income summary. Now we're going to look at our expense accounts. So we have a bunch of expense accounts. I'm going to copy these expense accounts and put them into Excel. You guys know I love using Excel. Oh, that didn't really work. Okay, that's not going to work. So we're actually just going to total these up. So we have supplies expense of $876, plus our rent expense of $880, plus our depreciation of $1,800, plus salaries of $18,360, plus income tax of $1,092. So our total expenses are $28,008. All right. So if you remember, the normal balance for an expense account is a debit balance because it decreases our equity. So in order to get our debit balance down to 0, we're actually going to credit that for $28,008. So we're going to credit our expenses. Oh, it's going to make us do each individual expense. All right, I didn't have to sum those up. So we have supplies, or salaries, I should say, of $870. That's supplies. Supplies of $876. Right? Yeah. Rent. What's our salaries? $18,360. Rent. Depreciation. So rent is $5,880, and depreciation was $1,800. Oops. And finally, we had income tax of $1,092. Okay. So if you remember, we added those up and we got $28,008. That has to be the debit because we're crediting expenses. We have to debit something, and we're going to debit the temporary account of income summary. Record the transfer of net loss income. Okay, so now we're going to go back to our original entry. Right? So here we have income summary with a credit balance of $30,720. So we have income summary. We have 2 entries that we made to income summary, right? I spelled that wrong, but that's okay. One of them is a credit for $37.20, and the other one was a debit for 28,008. Okay, so now we have to close these accounts because they're temporary. All right, let's put this over here so we can see what we're doing. So this is a debit and this is a credit. All right, so if I have an income summary balance that's a debit, what do I need to do? I need to credit it. Okay, so I'm going to credit my income summary account for 28,008. And what am I going to debit? I'm going to debit my retained earnings. All right. When you close your income summary, you're always going to close it to your retained earnings. All right. And now I have a credit balance. So in order to close that to zero, I'm going to debit it. And I'm going to debit it for 3720. And the closing entry is going to be retained earnings again for 3720. All right. So let's see if that's how. Yeah, all right. So they want me to put it in as all one entry. Okay. So this is a debit, this is a credit. 3720. So it's going to equal this minus this. So 2,712. Let's go back to my. I'm going to end up with a net credit balance because that's the higher number. All right. So this is going to be income summary. This is going to be retained earnings. This is going to be nothing. And this is going to be nothing. So it's going to be 2712. 2712. And you can see that's correct. And now we're going to go to the final entry, which is to close the dividend accounts. Okay, so for your dividends, we do not. So for dividends, we need to close out that account, and dividends are a normal debit balance because they reduce equity. So in order to get it to zero, we're going to credit dividends, and then it's going to go to retained earnings. So when you're closing your revenue and expense accounts, you're going to go to income summary, and then the income summary is closed to the retained earnings. And dividends, it's not income, so it's not going to go to the income summary. It's just going to be directly closed to retained earnings. Okay? Now let's look at how we put it all together and prepare our income statement and our balance sheet. So we're going to prepare an income statement for the year ended December 31st. So here we're going to look at our income statement accounts. All right, cash, asset, accounts receivable, asset, supplies, asset, equipment, asset. Accumulated depreciation is a contra asset, so it's a credit balance. We'll explain that at a later date. Accounts payable liability, income taxes payable liability, capital stock liability, retained earnings equity, dividends equity. All right. Once you get past dividends is where the income statement is. So our first part of the income statement is the revenue. So we're going to have lawn care revenue of $230,400. Okay. And then we have all of our expenses. Salaries, supplies, advertising, depreciation, and income tax. Advertising, depreciation, and income taxes. Okay? And the amounts are $124,800, $2,880, $720, 2,400. Oops. And 27,840. Okay. So our revenues minus expenses give us our net income. Okay, sorry. Income tax expense is going to go after. So income tax expense here of 27,840. This is nothing. Okay. So let's make sure we got everything. Salary, supply, advertising, depreciation, income tax. All right, so you have your income before taxes. This is our total expenses, sorry. Is there a description for this? No. All right, so we'll just leave that blank. So we have our income before, our total expenses, our income before taxes, our income tax expense, and then finally our net income is a positive number, so it's our net income. Let me see if we're missing anything here. Nope. Okay. So now we're going to go to the second part, which is putting together our statement of retained earnings. So basically what we're doing here is we're starting with our beginning retained earnings, which for this year is what's currently on the adjusted trial balance. Okay, so we've already made whatever entries we needed to make. So our retained earnings that we start with is 108. Okay, so 108,000. Now, you'll remember that there's two things that go into retained earnings: net income and dividends. Okay, so we need to close out our net income to the income summary. Okay, so our total income summary, we're going to debit revenue and credit our income summary, and then credit our expenses and debit our income summary. So our net balance in our income summary is going to be a debit balance of 71,760. We're going to have to credit our retained earnings for 71,760, which is our net income. Okay, so that's going to increase our retained earnings, 71,760. So 71,760. That's an increase to retained earnings for our net income. So we add our net income. Then we have our dividends. Remember, dividends decreases equity. So we're going to subtract our dividends of 4,800. And our ending retained earnings is going to be 174,960. Okay, now we can put together our balance sheet. So we have all of our balance sheet items: cash, AR, supplies, equipment. Okay, cash, cash, accounts receivable, supplies, equipment. This is accumulated depreciation on equipment. All right. Okay, so our cash is 218,640. Accounts receivable 10,800. Supplies 720. Okay. Equipment is 28,800. And our accumulated depreciation is an offset to equipment, so 12,000. That needs to be put in as a negative amount because amounts to be deducted should be indicated by a minus sign. So this is actually minus 12,000 because it's an offset to equipment. So you could see it's 16,800. So our assets are 246,960. That means the total of our liabilities and our stockholders' equity needs to be that amount as well. So now let's look at our liabilities. These are all the credit balances, right? So we have accounts payable and income taxes payable. So we only have two liabilities: accounts payable and income taxes payable, which are 3,600 and 8,400. Okay. So our total liabilities are $12,000. Am I missing any? No. Now we have capital stock of $60,000. Okay. And then we have our retained earnings. Now, we're not going to put in our original retained earnings. We need to put in the retained earnings that we calculated from our statement of retained earnings, because that's for the year ended December 31st. The 108 is at the beginning of the year. So our retained earnings is actually $174,960. So 174,960. Okay? So you can see our total stockholders' equity is $234,960 plus our liability is $12,000, give us $246,960, which is the same as our total assets. So that's my double check that I got the right amount in there. Okay, my assets need to equal my total liabilities and stockholders' equity. Don't worry if you have blanks here. They just put them in just to confuse you, so you can see that this is the right answer. Okay. So don't be worried if you have extra blanks in the problem. So does the company appear to be liquid? What does that mean? Well, we're going to go through some ratios, and we'll go through those in class, and then has the company been profitable in the past? All right. So let's see if there's any other problems. Okay. So I'm going to pause the video here. That's an example of what we're covering this week. If you have any additional questions, please let me know. Thank you.